You are listening to The Vocal Technologist. Spoken Tech for your ears.
Welcome, everyone. Today we're jumping right into the thick of the entrepreneurial world. It's moving incredibly fast, isn't it?
It really is. High speed, high stakes.
Definitely. We're going to look at everything from, those sky-high valuations to the smart pivots companies make. Think of this as a bit of a shortcut to understanding how things really get built and adapted out there.
Yeah, some real hard-won lessons for founders or really anyone curious about the tech scene.
Okay, let's kick things off with the money. I mean, these numbers are just wild. Databricks hitting a $100 billion valuation. That's up from, what, $62 billion last year?
Yeah, fueled by over $1 billion in new cash. It's staggering.
It is. But it's more than just a headline number, right? What's the bigger picture here?
Absolutely. This Databricks valuation, it's really a symptom of this massive balance sheet arms race happening in AI. We're talking hundreds of billions pouring in.
Hundreds of billions, wow.
Yeah, and it's strategic. This kind of capital lets the giants hoover up talent, buy up data, secure computing power. It fundamentally changes the game.
So it makes it incredibly tough for new entrants to even get started.
Exactly. It concentrates the potential returns among just a few huge companies. Very challenging for the little guys.
Okay, so that's the AI giants. But what about other sectors, like defense tech? You mentioned Saronic earlier, securing $600 million. That's still huge.
It is huge. And Saronic's strategy is interesting. They're playing it smart in a really complex area.
How so?
Well, instead of maybe going for broke on one giant project, they're securing smaller military contracts first, building prototypes, proving themselves.
Sort of de-risking it step by step.
Precisely. The aim is to eventually land what's called a program of record, basically, getting their tech fully adopted and funded long-term by the military. That's the big prize.
And they seem confident, projecting significant revenue soon.
Yeah, they're talking $400 million for 2025 and looking beyond just the Department of Defense, Coast Guard, international allies. It's about systematic validation.
Okay, so you've got the funding, you've got the strategy, but then you need to actually sell it. I've heard this, and it seems almost funny, founders using their investor pitch decks for customer marketing.
Oh, yeah, it happens way too often. It's a classic misstep.
What's the core disconnect there?
It's about the audience, fundamentally. Investors. They want the grand vision, the huge potential return, the big story.
Right, the 10-year plan.
Exactly. But customers, especially early B2B customers, they have immediate problems. They need solutions now. Your marketing has to speak directly to their pain points, not your VC's dreams.
So tailored messaging, focus on differentiation, maybe some social proof.
Absolutely. Precise, trustworthy, problem-solving, focused. Completely different from an investor pitch.
But what if the product itself just isn't quite right, even with good messaging? I heard about Whisperflow's pivot, which sounds like a great example of adaptation.
Oh, Whisperflow is a fantastic case study. They started with hardware, right?
Yeah, a hardware focus.
And they realized the market just wasn't there for what they'd built. So what did they do? They listened really hard to potential users, and they made a brave call. They basically ditched the hardware component and pivoted hard into a software-centric voice dictation platform, found product-market fit pretty quickly after that.
So the lesson is, sometimes you have to radically change course, not just tweak.
Exactly. It's about agility and, frankly, the courage to admit your initial assumption was wrong and move fast. Flexibility as a superpower.
Speaking of moving fast, viral product launches. Everyone wants one. You looked at, what, 6 successful founders? Any common threads?
Definitely. A few key things stood out. Number 1, show, don't tell. Make the product's value immediately obvious, visually compelling if possible.
Read that, wow, I can't believe this didn't exist.
Precisely that. And it's interesting, B2B software is almost being treated like entertainment now. You need to grab attention, make it shareable.
Social media as social currency, almost.
Kind of, yeah. Viral tweets, demos that pop. That stuff can actually influence early investors now, not just customers. It builds buzz.
Okay, shifting gears slightly. Let's talk about AI's impact inside the company on product development itself. There are some practical workflows emerging right now.
Yeah, beyond just asking an AI to write code, it's about using AI as a framework for, deeper thinking.
How so? Give me an example.
Okay, well, one is using AI to analyze user feedback, but not just to list features. Instead, build a feature taxonomy from the user's perspective. Understand their mental model, what categories they think in.
Ah, so it reveals hidden priorities.
Exactly. Or transforming, dull strategy docs into compelling narratives, or framing product requirements so everyone sees how they fit the big picture.
And even using it to critique plans.
Yeah, like having AI act as a really tough, brutally honest chief product officer, finding hidden risks, second-order effects you might have missed. It helps teams be more rigorous.
Fascinating. And staying on AI, there's this buzz phrase, RAG is dead, context engineering is king. What's that actually mean for people building things?
Right, it sounds a bit dramatic, but the core idea is important. RAG, Retrieval Augmented Generation, was just the start. Now it's about being much smarter, much more precise about what information you feed into the large language model into its context window.
So context engineering is just choosing that information carefully.
Essentially, yes, often using a two-step process. First, a simpler retrieval method pulls a broad set of potential candidates. Then, maybe the LLM itself helps re-rank those candidates to find the most relevant few to actually use in the final answer.
Why the fuss? Why not just stuff everything in?
Because of context rot. It's a real thing. Models tend to degrade if their context window gets too cluttered with too many bits of information, especially less relevant ones. Performance drops.
Like trying to recall page 500 of a book versus page 5.
Kind of, yeah. The model struggles to weigh all the information effectively, so better, more targeted data selection leads to better results. It's an evolution in how we work with these models.
Okay, one last area, and this one feels very personal. The idea of the cracked versus the slow roll B2B executive.
Yeah, this really hits home for a lot of founders and execs. It describes two different approaches, almost two different life philosophies within the startup world.
So break it down. What's the cracked archetype?
That's the person going full throttle, 70, 80-hour weeks, maybe more. Totally consumed, driven, aiming to build that next unicorn, that billion-dollar company. Intense pace.
And the slow roll.
That's someone who chooses a different path, still ambitious, still working hard, but prioritizing balance more. Maybe accepting that the outcome might not be that extraordinary hyper-growth story in exchange for, well, a more sustainable life.
It really highlights the personal trade-offs, doesn't it?
Yeah.
Beyond just the business metrics.
Absolutely. It's a silent negotiation many founders have with themselves. Ambition versus burnout, hyper-growth versus personal well-being. There's no single right answer, obviously.
What a ride. We've gone from these mind-boggling valuations and big strategic bets
Through crafting the right message, making huge pivots.
to the nuts and bolts of using AI effectively, and finally, these really deep personal choices founders face.
It really underscores that building something significant today is so multifaceted. It demands skill in building, pivoting, communicating.
And managing the human element, including yourself.
Exactly. That ability to integrate vision, execution, and that crucial self-awareness is, I think, more critical than it's ever been.
So a final thought for everyone listening, reflecting on all this, how might you apply these ideas? How will you navigate these currents, whether in your own work or just how you understand this rapidly changing tech world?
Great question to ponder.
That's all the time we have for today. Thanks for tuning in.
Spoken Tech, for your ears.